Good evening, ladies and gentlemen, and welcome along to this IC Markets webinar. Winter is coming, global stock indices in the coming months. My name's Chloe. I am a trader based in London from Trade with Precision. I've been trading for about 12 years now, and let's get started by having a look at this risk disclaimer slide. I'll just give you a couple of moments to have a look through this slide, make sure you agree with everything therein, and then we can get started properly with the webinar. Okay, so that should be enough time to have read through that slide. Something by way of an apology in advance, just in case. I do have a 2-year-old at home with me who had some vaccinations today, so he's in a bit of a grumpy mood. If any of that sound carries through to you guys, then I can only apologise. Hopefully my voice will be louder than whatever commotion is going on elsewhere. So as I said, my name's Chloe. I'm a trader of 12 years from London. I am predominantly a technical trader and predominantly a trend-based or momentum-based trader. I trade pretty much most leveraged markets. I trade forex markets, I trade indices, stocks, commodities, cryptocurrencies, although at the moment I have to say I'm not trading cryptocurrencies in the current markets. And yes, that's a little bit of background about myself. And without further ado, then welcome along everyone. If you wouldn't mind popping into the questions box and just typing in that you can hear my voice okay and that you can see the screen okay, that would be fantastic to get that feedback. And then we will get started with the webinar. So just pop into the questions box. I'd like to keep this session as interactive as possible. Fantastic, thanks Diana, thanks Godwin. If you do have any questions as we go through the webinar, then please do feel free to pop those in the questions box as well. I have no doubt that if you have questions, the answers to those questions will be helpful to the other people listening as well. They just might not have thought of the same question as you. So please do feel free to ask questions. I'll get through as many of those as I possibly can in the time that we have. So let's have a look at the agenda for today. We're going to be doing a live analysis of the major global stock indices. We're going to do a chart analysis on multiple timeframes. We're going to look at the daily, weekly and monthly timeframes. And we're going to have a look at building a potential watch list to keep an eye on for November and beyond. Now, some of you might ask, why do we do a chart analysis on multiple timeframes? Because, you know, if you're a swing trader, you might only want to look at the daily time frame, or perhaps if you're an intraday trader, then you might perhaps only want to look at the hourly time frame or the 15-minute time frame. But with my years of experience, I have found that no matter what the time frame I'm trading, and I do swing trading and day trading, no matter what the time frame I'm trading, my trading is always improved by doing a multiple time frame analysis. There isn't really an exception to that rule for me. My trading always benefits from having a broader view of the markets than that time frame that I happen to be trading. So if I'm swing trading, then I will always look at the daily time frame, but I will always look at the weekly and monthly time frame as well. But one of the most important aspects of my trading is horizontal levels of support and resistance, and I start putting those on my charts from the monthly time frame, and I work my way down because okay, I've got a message not able to hear. Let me just reply to that. Okay, sorry about that. I just that's the one thing that I can't reply to easily with talking is when someone contacts me to say they don't have sound. So I had to just type a reply message there. No worries, Leon. Welcome along. Good to have you. So as I was saying, I always start on the monthly time frame for my horizontal levels, and I'll give you a little bit of a rundown of how I do that when we get to looking at the charts, because the longer the stronger for many aspects of trading, and the horizontal levels included. The longer a horizontal level has been in play, the stronger it is likely to be. And so horizontal levels drawn based on monthly timeframes with interaction from many, many years ago are more likely to be stronger horizontal levels than those just drawn based on recent days price action. I am a trend-based trader, as I mentioned previously, and trends are something else that are stronger the longer the time frame you're looking at. So a trend on a weekly or monthly time frame will be stronger than the trend on a 15-minute time frame. So even as an intraday trader, you can pick up intraday trends, but the trends that go in the direction of the higher time frame trend are likely to go on for longer and be stronger than those trends that are simply just kind of pullbacks or retracements based on slightly higher timeframes. So plenty of reasons to look at multiple timeframes, and we'll go through that. So without further ado then, let me bring up my charts. Okay, so I am using the IC Markets MT5 program for my charts. And let's start with looking at the US indices. So I did say I was going to go through very briefly how I get my important levels and how I go back along the timeframes to do that. So starting with the US 500, then I'm going to actually put it on the monthly time frame. And you can see here on the monthly time frame that overall we have a very, very strong uptrend. And what I have done is, it's not important really for me to put horizontal levels in across the entire chart. But what I do want to have is one major horizontal level beneath current price and one major horizontal level above current price. And that gives me a little bit of a start of a roadmap as to where price may be headed next. So I'm not going to start putting horizontal levels all the way down here, because as you can see, this is a monthly time frame. It's likely to be many months before price were to reach all the way down there, even if that was an option. So my first important horizontal level on the monthly time frame is this level over here. That's because price was in a strong uptrend and it strongly reacted against that level. And there was a couple of months of strong bearish price action after price reacted at that level. So that's why that is a relevant level to me. And I put that in on the monthly time frame. Sometimes it makes more sense than other times to do things on the monthly time frame. And then the other level I'm going to put in is this level here, just because this at the top here, this price action at the top here, if we break down the price action, I'm always breaking down price action into trends. And what is the definition of a trend? A definition of a trend is higher highs and higher lows in price action, or lower highs and lower lows in price action. Okay, so when I'm analyzing trend and price action, I'm always looking for highs and lows. And in this price action here, I've got a move up, and then I've got a retracement. Now, it's just a 1 bar retracement, but that bar is, after all, 1 whole month over here. So I am going to take it into consideration and draw a downwards move there. And then we get to the high again, and another move up. Then we get another move down over here. then another high over here, followed by another move down. So having drawn that on, and it's not really all that important what we call it, but some people might recognize that as a reversal chart pattern called a head and shoulders pattern. My point being, the reason that I see this horizontal level here as the important horizontal level above price is because that was really the start of the reversal pattern taking place. So that, if you like, is the kind of the neckline of that head and shoulders pattern there. So it's the start of, it's the beginning of the end of the uptrend, and it's the beginning of the downtrend. So here we've got lower high and we've got lower low here. So that's this horizontal level is where that downtrend kind of began. I'm calling it a downtrend. It's, let me just get rid of my scribbles. It is a downtrend in price action in that we do see lower highs and lower lows down here. So that does look like a downtrend on the monthly time frame. However, let's not forget that we have seen significant pullbacks in the past, and the bigger the move on the way up, the bigger the pullback is likely to be. So we can see, and we've got the 50 moving average. This red moving average at the bottom here is the 50 moving average, and we can use that as a guide. So price has pulled back to the 50 moving average before as part and parcel of the overall uptrend, and it's still eventually returned to that uptrend. So it's not beyond expectations that price would pull back to the 50 moving average on this monthly time frame. In fact, it's perfectly normal. So while I am calling this a downtrend on the monthly time frame because I am seeing lower highs and lower lows, it doesn't necessarily mean that I think this downtrend is going to go on forever, because it could just be a pullback in and quite a reasonable pullback, but it could just be a pullback in what is eventually going to be a return to the uptrend. So that's a bit of kind of bigger picture analysis. What I would then do is I would go down to the weekly time frame, and I would see if either my horizontal levels that I've already drawn on need fine-tuning slightly, which they often can do, or I will see if there are any other relevant horizontal levels that need adding to my chart, which, in all honesty, I don't think there are. I think I'm happy with the horizontal levels that I've got on my chart at the moment. One thing we want to try and avoid is we want to try and avoid cluttering up the chart. The price action is the most important thing. And if we put too many horizontal levels and indicators and things like that, then it can end up just cluttering up the chart and we can get a little bit confused. So that's the weekly time frame. I also noticed that on the weekly time frame currently, I do have a downtrend. Now it's a little bit, it is a little bit questionable, this downtrend, because actually what we've seen here, we've seen a move down and a pullback, and another move down and a pullback, another move down. Then we've got a higher high. So we've got lower high, then we've got higher high, but then we've got a lower low. So actually right now on the weekly time frame, there isn't much of a trend. I wouldn't call this an uptrend or a downtrend on the weekly time frame. What I would say is that my bias is actually bullish based on most recent weekly price action, because we do have this very, very strong week from last week, and if we draw that price action in, it does look very bullish. It looks like price is moving upwards. If it is going to move upwards, I would anticipate potentially it reaching this next horizontal level of resistance around 4270. So I would use the weekly time frame to put on more horizontal levels if relevant. Then I would go down to a daily time frame, and it's if I'm swing trading, it's the daily time frame that I actually take my trades. The daily time frame would be my trigger trading time frame, usually if I'm swing trading. Daily or 4 hourly. So what I would then do on the daily time frame is I would look to find any more relevant horizontal levels, which can be slightly easier to spot the intermediate levels on a daily time frame. I would say just about here, there is some resistance over here, there is some support over here, there's definitely support and resistance over here as well. So I would say that would be the only extra level that I would add onto my daily time frame. I would see that as a more intermediate level rather than the strong, hard levels of support and resistance drawn on based on the weekly and monthly. So what that gives me is a roadmap as to where price currently is and where is it likely to move next. Now on the daily time frame, I noticed that there is a higher high and a higher low. So that trend on the daily time frame in terms of price action alone is bullish. However, you will notice that I also have moving averages on my chart. So I've got the 10 moving average, which is the black one at the bottom here. I've got the 20 moving average, which is the blue one above that. I've got the 50 moving average, which is the red one. And I've got the 200 moving average, which is the green one at the top. Now the moving averages I just used to confirm my analysis of trend. And what I'm looking for is I'm looking for the moving averages to be in the correct order and pointing in the correct direction. So overall, during this period of time here, those moving averages are pointing downwards and they're in the correct order for bearish price action, i.e. the fastest moving average, which is closest to price action, being at the bottom, and the slowest moving average furthest away from price action being at the top. That would indicate a downtrend. What I've got currently is I've actually got no real pattern for the moving averages. They currently look like they're swapping over. So the 10 has come above the 20. The 20 looks like it's in the not too distant future going to come above the 50. But they're certainly not in order and they're certainly not all pointing in the same direction. So that doesn't necessarily indicate there is no trend, but it does suggest that the trend is not well established and not particularly strong at this point. So I'm not 100% convinced that there is an uptrend in place here. However, based on the pure price action, I am actually bullish just based on this price action on the daily time frame, higher highs, higher lows, and on the weekly time frame, just based on this most recent last couple of weeks of price action. The buyers have pushed price up, the sellers have tried to push the market back down but failed, and the buyers have taken over again and pushed the market through this horizontal level of what could have been resistance, but in fact price has pushed back up above that level. So in the short term at the moment, what I would anticipate is either price continuing to the upside, or I would anticipate potentially price pulling back to this horizontal level and retesting this horizontal level before then heading to the upside. And ultimately, if this is going to be an uptrend, then I would ultimately be looking actually for price to get all the way up to this next horizontal level around 4270. So in terms of what that means for swing trading, it means I'm looking for a long opportunity, but in order to trade this on a daily time frame, I would need to wait for a pullback. So that's why I'm looking around this horizontal level potentially for an opportunity to trade long. However, on an intraday time frame, and this is where the looking at across time frames comes in very handy. I've got a bias on the daily time frame, which is long. I can then go down to lower time frames to see if there is anything setting up to the upside on an intraday basis that might be of interest. So on the 4-hourly time frame again, I would really be interested in price coming back to retest this horizontal level here. But on an intraday basis, it might be actually that price could continue upwards, and it really depends on what strategy you're using and what time frame you're trading. But on an intraday basis, I would even go so far as going down to the 15-minute time frame on certain instruments. And it can be possible to find a reasonably good reward to risk opportunity on an intraday basis, even if the move is not that great in terms of how many pips. We can see, you know, we would only need the trade to move a little way towards this horizontal level to get some profit on a 15-minute time frame, whereas on a daily time frame, we would actually need price to move considerably. And that's one of the benefits of intraday trading. So that is my kind of shorter term outlook on the US 500. Is I am actually quite bullish at the moment, as long as the trend is up. So I would need the trend to stay up on any time frame that I'm trading, including the 15-minute time frame. You know, if this starts to pull back, you know, it is pulling back, and as long as it pulls back to a reasonable area, perhaps even this previous high, and then shows some kind of reversal and indication that it's going to return to the uptrend, then that's fantastic. If, however, price starts pulling back and we start seeing a break below this area of consolidation here, then I definitely would no longer be interested in trading that on the 15-minute time frame, and I would have to go back to a higher time frame, probably likely the hourly or even the 4-hourly time frame, to see if that price is going to retrace and react at this point here, in which case that might look better in terms of trend on a higher time frame. So for example here, if price were to pull back to this horizontal level down here, that would simply then form a higher low on the 4-hourly time frame, whereas on the 15-minute time frame it would happen as a series of lower highs and lower lows, which would look like a downtrend rather than an uptrend, which is what we want to be trading. So in the longer term, I do have a bullish outlook on the US 500, but I have no evidence as yet that the uptrend has started. So on the monthly time frame, I still see lower highs and lower lows, and it's entirely possible that price could form a lower high at this point and come back down to form another low. And really, ideally, what I would love to see happen would be a higher low on the monthly time frame. If I were to see a higher low on the monthly time frame followed by a higher high, that's the point I would be really interested in starting to build up long positions on this market. So we're a little bit premature on the monthly time frame in terms of building up long-term positions. In the short term, I'm bullish, but in the long term, really, I want price action evidence that an uptrend is in place on the monthly time frame, or at least on the weekly time frame, before I start actually building up swing trading positions. Let's move on to another market. So let's look at the US indices are all fairly similar in their price action. So this is the US 30. This is looking even more bullish than the US 500. So we've had a very, very strong month. And in fact, it's an engulfing candle. It's a very large engulfing candle from last month. And prices continued to take out the high. My major levels of support and resistance, you can see this one down here strongly acted as support. The higher level that I have here, the level of resistance, price has actually broken through that level. So price is already on the way up. It's above this level, so this level could potentially now act as support to price. I need another level, if possible, up here. Is I would say around 35,000 would be where I would put a conservative next level of potential resistance there. So I'm very bullish on price based on the monthly, weekly, and in fact daily time frames. And similarly, we've got a horizontal level that price has recently breached. So on a daily time frame, I would be looking for price to pull back to that level. On a 4-hourly time frame, that's also what I would be looking for. And on an intraday time frame, I would simply be looking for long opportunities with a view to trading up to that next level of horizontal resistance. So I am bullish on the US 30 as well. Slightly less bullish is the NASDAQ. The NASDAQ on the monthly time frame again looks like a downtrend at the moment currently, but we do have a major level of support that price has held above. Weekly time frame also looks like a downtrend. However, if we analyze this most recent price action here, I have got a move to the downside followed by a move up, a high forming there, a higher low forming there, and a higher high. Price has just broken above this high here. So on the weekly time frame, it looks potentially like a reversal of the downtrend could be happening, and there could be a further move to the upside, and that quite possibly could be tradable on the daily time frame here. I would be simply waiting for a pullback and a higher low on the daily time frame, or again, alternatively, if you're an intraday trader, then going down the time frames and trying to find some kind of entry, obviously depending on your strategy, as to a possibility of getting into this to the upside as well. What other indices are there to look at? Well, we've got the Australian 200. So let's have a look at that, starting off on the monthly time frame. And again, we might be able to draw some key horizontal levels in on the monthly time frame. I will just put a couple of levels there as a guide that I will fine tune on the lower time frames. So the support level here has also been resistance in the past, and then this level over here, this is really where price was held up for quite a few weeks above this level, so it's also significant. It's been resistance recently as well, and price has now broken up above this level. It's coming down. It has actually retested that level. I'm just going to put the next major potential level of resistance up there as well. So in terms of daily time frame, there isn't really, and in fact, let's look at the trend on the weekly time frame. So this is a double bottom pattern that has just been triggered. So we've just seen a higher high after having seen this pretty much the same low down here. So that is a very bullish signal for this market. The horizontal level that I've got here around 7130, that's a potential level of support now, which price could bounce from. On a daily time frame, I would actually be looking for more of a pullback before building up a swing position to the upside on this market. But on an intraday time frame, it could be that there is an entry from this level. If we're anticipating price continuing the uptrend and continuing to move upwards, then the fact that price has pulled back down to this horizontal level, and the fact that that matches with the area of equilibrium in and around the 10 and 20 moving averages, could be a suitable opportunity to buy there on the 4-hourly time frame. And again, looking to lower time frames, perhaps the hourly time frame, perhaps the 15-minute time frame. If I was looking at this to trade on the 15-minute time frame, I would be looking at this price action here as consolidation, and really I would be looking for a clear higher low and a clear higher high, preferably above this level of resistance there. So if I were to just draw that in properly, this level here, we can see it's been support over here. It was then the beginning of the end of that uptrend on the 15-minute time frame. Price then came down, broke through that support, saw it again as resistance, and then price has been consolidating since then. So that ideally is the level I want to see broken above if I'm going to be trading long on this on an intraday time frame. The other market that is very, very frequently traded is the UK 100, the FTSE index. So we can have a bit of a look at that as well. Now this is there is not a lot of trend on this market at the moment. Price is really quite rangy between the horizontal level of what has been resistance and also support here. So it's been a lot of resistance over here and a lot of support as well. And it's heading back up towards these highs over here, which have been resistance in the past. So price has struggled on its most recent move up. Price has struggled to get much higher than this 7640 level. And so that would be my next level of resistance up there. In terms of a weekly time frame, again, we can see here that there isn't an awful lot of trend. It is possible to see the highs and lows. So we can see there was the beginnings of an uptrend there, but then this horizontal level came into play and price has really just been ranging between that level and this horizontal level of support. So there's no trend there on the FTSE on a monthly or weekly time frame. So that really reduces the possibilities for swing trading on this. So this would not necessarily be on my watch list for swing trading at the moment. The only way really I would be interested in swing trading this would be if it approached this level up here, this horizontal level up here, and if it broke through. And not only would I need to see a breakthrough, but I would also need to see price breaking through that level and then coming back to retest, and an indication that price is, the buyers are getting into the market at this level. That would be very interesting to me. That's quite a way off in terms of where we are now on the weekly time frame. Now, that doesn't mean to say that there are no trading opportunities here. This is a weekly time frame, and the top of that area of range is quite considerably higher than that. So if we were to think about looking at it on a daily time frame, for example, there is plenty of space to trade this. If price comes down and perhaps retests and gives a strategy entry around this area here, then potentially there could be quite a nice move up to that level. And as long as we're conservative with targets and make sure we're not trying to squeeze every pip out, but perhaps take into account this previous high as well, which is where price last failed to break above that area, then there could be some daily trading opportunities there. On an intraday basis, it's still a case of looking for those trends on the 4-hourly time frame. Price appears to be trending quite nicely still. So we see higher highs, higher lows all the way up here, and price appears to be continuing in that trend. So I would want to see another pullback. I want to get in at the best price I possibly can in order to then see price move off in the upwards direction. But one thing I'm going to bring in at this point is I'm going to have a look at the RSI. So I'm going to just drag the RSI onto the chart. I'm just going to use the standard settings, which is the 14-period RSI. And I'm just going to put that onto the chart. I'm also going to bring the MACD onto the chart. Again, the standard settings, I use the 12, the 26, and the 9. So I'm going to have that on the chart there as well. Now, the reason I'm looking at this is because I'm looking for evidence of divergence, because trends don't go on forever. And at some point there will be a bigger overall pullback, and especially because on a market such as the UK 100, it's not trending particularly strongly anyway. There is a trend here on the 4-hourly time frame, but it's certainly not really supported by a trend on the weekly time frame, even though the current direction is upwards. So what I would want to do is I would want to be really certain that the trend was going to continue if I was going to trade this. And what I see here actually is that while price action is making higher highs during this trend, I actually see that the MACD is diverging. So the MACD is making lower highs and the RSI also. Whoops, that wasn't a very good example. So the MACD is heading downwards, the RSI is heading downwards, while price action is still heading upwards. So that's divergence, that's bearish divergence, which suggests that there could be a retracement, that the strength of this uptrend could be running out of steam, it could be running out of momentum, and there might be more of a retracement perhaps before then price moving off in the upwards direction. So that's something just to be aware of, and something that I would be looking for confirmation on. So of course, if price does continue to a new high up here, and MACD and RSI continue to new highs, then of course that would be convergence with price. That would indicate that the momentum has been regained and price could be ready to move off again. So the markets are constantly in a state of flux. Things change all the time, but just at the moment, I'm looking at this most recent divergence between the price action and the RSI and MACD, and that puts me off trading long on this particular market at this particular time on an intraday basis. Let's have a look at and if there are any specific markets that you guys want me to look at, then please do pop those into the questions box, and I'll try and get through as many as I can. I'm going to look at the where is it? The DAX, the Germany 40. So I'll open that in a new window, and I'm just going to put my template on, which let's put this template on, and let's look at this on the monthly time frame. Let's just wait for the data to load a little bit. And this one, is looking particularly bullish on the monthly time frame. So we have seen that pullback, that strong downwards move over the course of pretty much the entire year. So basically from the end of 2021, very beginning of 2022, this has been moving down, and it's come down, and it's come down all the way to 12,000, which is a significant horizontal level. Not only is it a significant horizontal level in terms of past support and resistance, so we see this resistance up here, we see support over here, but it's also a significant horizontal level in terms of the fact that it is a strong round number. It's a strong round number, 12,000, and strong round numbers like that tend to be numbers that traders look at, and therefore price tends to react around those levels, and that can kind of be like a self-fulfilling prophecy in terms of where the horizontal level might be. So price has strongly reacted against that last month. It's been moving up ever since. Importantly, it has taken out these previous two highs here, which could potentially have been resistance as well. We see some more reaction around that area, and it's heading to the upside. The next potential strong area of resistance would be around there where these lows are here, which we can see slightly better on the weekly time frame there. So again, this horizontal level that I've marked in here is basically where that uptrend kind of died a death, really. Price was being supported at that level, but finally price broke through. That was the end of that uptrend, the end of the range and consolidation, and the beginning of this very bearish move to the downside back to this important 12,000 horizontal level. So that's the next level of resistance that I would be aiming towards. And until that point, price is looking very, very bullish indeed. On the weekly time frame, price has taken out this previous high, and on the daily time frame, again, we can see very, very bullish price action. The moving averages all starting to point upwards as well. And what I would be looking for here would be a pullback down to the previous high potentially over here, maybe even a pullback on this daily time frame down to the horizontal level. That would be a pretty deep pullback, but it would potentially also yield some opportunities, so I won't rule out that. But a pullback certainly as far as this previous high on the daily time frame, and then looking for an indication that that uptrend is going to resume before looking for long trading opportunities. And in terms of intraday, I am bullish on the Journey 40 intraday as well. You can see a very strong uptrend there on the 4-hourly time frame, a strong uptrend visible on the hourly time frame as well. And even in this area where price appears to be kind of consolidating, it still actually is showing higher lows and higher highs. So there is still trend there, even though price is consolidating. So I would be looking for a breakout of this area here and a potential long opportunity. And then finally looking at the 15-minute time frame, that's where perhaps we are most likely to catch a move to the upside beginning. At the moment, let's have a look at the 15-minute price action, so we can see the very strong uptrend over here, and then the retracements, the pullbacks are getting deeper and more protracted. So it looks like the momentum is slowing down. However, we still have a higher high and a higher low here. Most recently, this slightly lower high has been forming, so that's what I would be looking to break. And I'd love to see a strong bullish candle that closes above this high here, and that could potentially be an entry opportunity. Or alternatively, I would simply look for a higher low and a break of this high, and then look for long opportunities along the way up there. So I'm bullish on the DAX as well. Yes, this webinar is recorded, and I believe the recordings get uploaded to the IC Markets YouTube channel, so you will be able to catch it. I'm not quite sure how quickly it happens. It might take a day or so to upload the video, but you should be able to catch it in a day or so on the IC Markets YouTube channel. This webinar was going to be, and you know what, Nilesh, I'm not entirely sure of the exact channel name on YouTube. I imagine if you search on YouTube for IC Markets, then it will probably come up if you search for it. Apologies, I don't have to hand the exact name. So one market that I have been asked to cover is gold, and I'll be happy to do so. It's not necessarily an index market, but I think that, you know, gold is something that is very heavily traded. It's one of the most heavily traded commodities, along with the crude oils. Let me see if I've got a chart already open of it. I do indeed. And I look at the gold chart pretty much every day anyway, so even though this webinar was going to be just indices, I think it's important to keep an open mind, and sometimes looking across instruments can give a bit of a broader overview of the market anyway. So you know, in talking about perhaps risk on, risk off markets, gold can be seen as a bit of a safe haven, so it can tend to increase in value as people buy gold or move their investments into gold from perhaps riskier investments, like, for example, the stock markets as they have currently been. You know, for most of the year, those US stock indices have been very bearish, and so therefore, in order to kind of strengthen a portfolio, people may start to sell out some of their stock positions and instead buy gold, which can be seen as a bit more of a safe haven. So turmoil in the markets can mean a kind of more bullish move on gold, which can be seen as a bit of a safe haven. So On the monthly time frame, I've got some major horizontal levels drawn in here, and I'll read them out to you actually, because these horizontal levels, they've been on my charts since 2011, pretty much 2011, 2012. So this level of support down here is at 1530. So until recently, that was the level of support that I was potentially looking at. If gold were to have continued its bearish run of the last few months, then that would have been my lower level of horizontal support. And the next level of what is now currently support is around 1680. That's a more recent level. And then there is a strong level of horizontal resistance based on this price action from back in 2011, 2012 at 1800. And then the next level above that is at 1915. So those are my 4 very strong levels of support and resistance based on the monthly time frame. Looking at current price action on the weekly time frame, I've actually just recently seen a reversal pattern down here, a double bottom on the weekly time frame. Price has taken out the high there, the neckline of that double bottom pattern. So I am actually bullish on gold currently, all the way up to the 1800 level. In terms of tradability, I would be looking to the daily time frame. I would be looking for a pullback on the daily time frame. I want to get in at a better price than I currently see. It might be that price is going to go all the way up to the 1800 level without looking back on the daily time frame, in which case that's fine. I may not find a trade on the daily time frame, but what I'm looking for is a pullback. I'd like to see that pullback come ideally down to this level here, which is an intermediate level of potential support, and it's been resistance just here, it's been support over here in the past. So that's really, if price pulls back down to that level, I will be looking for long opportunities from that level on the daily time frame. On an intraday time frame, I'm simply looking for opportunities into the market based on trend. So I'd be looking for a pullback on the 4-hourly time frame or hourly time frame. I'd ideally like to see price move a little bit further upwards first before pulling back, but then ultimately that's what I would be looking for. And on a 15-minute time frame intraday, again, I would just be looking for a pullback, and again, it depends on what strategy you're trading, but my bias is bullish at the moment on gold. Steph asking, do I have a list of what conferences I go through before getting into a trade? Yes, I do. I mean, an hour is just simply not long enough to teach a full strategy, so I simply can't teach you my strategy, but I pretty much have been going through what I would be looking for in terms of price action before getting into a trade. So I start by getting my horizontal levels in place on the monthly and weekly time frames, and then the highest time frame I actually use as a trigger chart would be daily time frame, and I would be waiting for, so if I see an extended move like this, lots of strong bullish candles, that can leave a market a little bit overextended, and I would definitely be looking for a pullback before looking to get into this market to the upside on a daily time frame. So I'd simply be looking for a pullback, and I would have in mind an area that I'm looking for price to pull back to. So in this case, I'm looking for price to pull back to this 1725 area, 1724.69 is where my horizontal level is, but we might as well call it 1725. That's the level. So I don't do anything on this time frame on this chart until I see price pulling back down to this level. And if I do see that, then I'll start to look for long opportunities. On an intraday time frame, I would simply be looking for a trading opportunity based on a pullback, and it might be something like a bounce from a moving average. So And I would never trade a bounce from a moving average, but I would use a moving average as an area of equilibrium. So if I just put the 20 moving average on here in blue and the 10 moving average in black. So I would usually be looking for a pullback into this area in and around the 10 and 20 moving averages. It doesn't have to be a bounce from the moving average, but that area is what I call the area of equilibrium. It's where price very frequently pulls back to when it's in a trend. And so if price pulls back to that area, I then look for evidence that the buyers are coming back into the market. And that evidence would be based on a bar by bar or candle by candle situation. So for example, over here, I've seen that prices moved off to the upside. It's then pulled back down into this area around the 10 and 20 moving averages here. And then this candle here, after having seen 3 bearish candles, this is a bullish candle, and that's what I would use as my trigger for entry. So I can't really teach you much more of a strategy in the time that we've got, but that's basically what I would be looking out for on whichever time frame I'm trading. But it would have to have agreement of higher time frames. If I'm trading on the 4-hourly time frame, it has to be in the same direction that the daily time frame is traveling in. If I'm trading on the 15-minute time frame, it has to be in the same direction that the hourly and 4-hourly are traveling in. Nilesh, in answer to your question, Nilesh has asked what may need to look for scalp trading to quick in and out. I'll answer you very honestly, I don't scalp. I have done scalping in the past. I did a lot of that probably 12 years ago when I first started trading. I think possibly one of the reasons that traders get very attracted to scalp trading and quick in, quick out is perhaps because they're looking for large rewards in a short space of time. And I never found that to be the most profitable way of trading for myself. So I don't scalp. It is possible to get quickly in and out of trades on something as low as the 15 or even the 5-minute time frame, while still sticking to the kind of ethos of trading with the direction of the major trend. So, you know, if I'm looking here on the daily time frame, I would be looking from, you know, looking at this is a triple bottom, but we were, if you remember, we were looking at on the weekly time frame as a double bottom. If I'm looking at that as a reversal pattern and I'm saying this is the horizontal level that I need to see broken in order for this reversal pattern to play out and in order for me to be bullish in the market, then at that horizontal level there, I would be potentially looking on the 15-minute time frame, and that horizontal level there, was it that horizontal level? 1724, was that the one? Yes, it was. So I would be looking at that horizontal level. I'd be looking for it to break, and then I would be looking for the next possible opportunity into the market. So based on what I've just told you about the equilibrium zone, ideally, what I would be looking for ideally would I be looking for a break through that level and then a retest. And I would like my perfect entry to be around there. But sometimes the market doesn't do what we want it to do. Sometimes it will just break and smash through a level. And that's fine as well. We can just look for the next pullback to an area of equilibrium, which is around here. I would then look for my bullish candle, which is this candle here, very bullish long-tailed candle. I would perhaps place an entry at the high or just above the high of that candle with a stop loss at the low. And this is a 15-minute time frame. So within, what have we got here? 4, 8, within 4 hours, I've made 1 times my risk in profit. If I hold the trade open for longer than that, then I can make significantly more profit from that. So it is possible to make quite good profits quite quickly. Now this took quite some time, but there will be another occasion where, you know, you could trade from a return to the equilibrium area and price moves off quite quickly, and you could make maybe in 1 hour or 2 hours some pretty reasonable profits. Do I follow smart money concepts at all? What do you mean by smart money concepts? The concepts that I follow with my trading, aside from having a very, very strict strategy and trading with the direction of the overall trend, I am very, very hot on risk management. So with my trading, I'm more interested in my performance over the month and over the year than I am interested in my performance over the day or trade by trade. So anyone can have a strategy that works maybe 60, 70, 80% of the time. That always leaves 20% or 30% of the trades that will lose, definitely. And so you have to be prepared for that as a trader. Be prepared that you are definitely going to lose a certain percentage of your trades, and therefore you need to keep your risk management very, very strict in order that your losing trades are preferably smaller than your winning trades, or at least the same size as your winning trades. So that overall, if your strategy works 60 or 70% of the time, you would make money. That is pretty much, we are just coming to the end of the hour. Yes, I do use psychological numbers for horizontal lines. So any major psychological number, I will potentially use that as a horizontal level. So let's just quickly go back to here. Just so that I can give you the contact details. A lot of people are asking about whether the webinar is recorded and things like that. Any technical questions that you've got, any questions at all you've got, they've got a fantastic customer service team at the end of the phone. There's a phone number there for you to contact them, or if you prefer email, then they've got an email address that you can contact them there. They've got all the usual socials as well, Twitter, Instagram, Facebook, for you to get in touch. You can learn more about their services, and if there are any webinars that you want to join in for, then they'll be more than happy to help you out with that as well. So thank you very much for being with me for the past hour. I look forward to speaking to you in the not too distant future. Cheers everyone, have a wonderful evening.